Well, good day, all. Ira Epstein, and here we are, Thursday evening, the 28th of December, 2023, the time 6:15 p.m. Central Time. And I want to wish one and all, obviously, not only a Merry Christmas, but a Happy New Year. I know many of you will be going away, doing whatever you do over the next 3-4 days. We're not open on Monday. Remember, that is the holiday period. But we're back on Tuesday, and I'll be jumping in the saddle aggressively looking for trades again. Do I pull back? A question that I have to respond at this time of the year. And the answer is yes. My natural instinct is to back away. The markets get thinner. If you haven't made your year, you're not going to make it in terms of getting done certain things. Do markets typically surprise at this time of the year in terms of new trends that pop up and go one direction or the other? Typically not. That's been my experience. The markets keep going with what they were. If they weren't trending, they stay not trending. If they were trending, they stay in those trends. So that's pretty much what I see going with it. The dollar getting a bounce today after getting down towards the 100 level. It's been a heck of a break. 2 weeks ago today, I put out for you a dollar index report predicting a big break in the market. You don't think you've got it? When we take a look here in a moment, you'll see it most certainly has given it to you. And this year, I intend on doing more of my special reports. And in January, I'm just trying to pick a date now. Let me get myself settled in the first week for a live webinar. And we'll try to do one of those a month and come up with ideas for you and where we're at. So let's talk the basics of what we do in this particular video. I want you all to understand. I had a gentleman write me on this. I looked at your video. I wasn't impressed. You didn't give me a strategy. This isn't where the strategies are. This is an overview of the market. Let me explain why. I'm a registered broker. You don't need to put in here to see this a user ID and a password. So what I say by federal law, I cannot say go out and buy this, sell that, do this, I'll keep up with the trades and so on. The disclaimers would be insane. It's not what we're supposed to do. I do that in my morning subscriber videos and in my written updates, okay? That's where that's all done. So if you haven't tried it, you get a free trial to it. That's where you go for all those. Now, in fairness, I'm not putting out many of that right now. I'll begin in earnest on Tuesday, coming into the markets and trying to find new positions. You often get whipped around a little bit right at the beginning of the year, but sometimes you catch something that just sparks. Whatever it is, I'll just apply the same techniques that we've had. But in looking at the gold market, let me give you the basics because that's what this is about. When you're over the 18-day moving average of closes, you look at the 18-day averages, you're lying in the sand. The number itself is neutral. When you're over it, you have a bullish bias, and that's a filter that if you get other buy signals, you want to go with them. I teach traders that when you're over the 18-day average, you get a sell signal. It's one thing to come out of a long position. It's a very different thing to go short, and I wouldn't recommend that. When we take a look at what's happened, we've had a 50% bounce. What do I mean? You got up to the 2150 area, you fell back here into the 1990, and you've come back into the 2070s, 2060 area. You're at about a 50% bounce in the market as the market got overdone on the downside, and now it's looking for its footing. The footing's been found temporarily. You're in an uptrend. The swing line is this brown line. And what it does is you look back at the day before and you're looking to see, if you take my full charting course, you learn this, do you have a higher high, a lower low? Do you have an inside moment? Do you have an outside day up or down? 5 different variables. And the line draws itself based on which one of those variables. Right now, you have a market that's trading within yesterday's range. In other words, within today's range, which is Thursday, but remember, we're already at Friday trade. So you had the line going up, now the line will point down. We'll see which way it goes. But until the market takes out 2065.10, the trend is up because you have a pattern of higher lows and higher highs. Unfortunately, no moving average is going to offer you support because the closest one is the 18. It's a 20, 44, 10. So if you were looking to fall to a moving average, that's not going to be the place you want to do it. You'll break the pattern of higher lows, higher highs. And what is stopping the rally? The Bollinger Band. Bollinger Bands are your breaks on the upside and the downside, especially when you have sideways action. Now, when you break out of the sideways action, and eventually you have to make a trend, the way that it goes can be vicious. Take a look at the downside here. Recently, we developed some mini sideways action, resolved to the upside, came back down, haven't taken out these important lows back here, and the market's again working up to the resistance point. We'll see what happens. Obviously, a big catalyst for this market, in my opinion, would be if the coalition or the United States or Israel decides to take on Iran individually. Iran, again, has begun enriching different uranium amounts. There's big problems, and we'll see how the world wants to deal with them at the beginning of 2024. But suffice to say, the first time you hit a Bollinger Band, you look to see, are you embedded? Embedded means the blue and the red lines are going sideways over 80. You're not. This is the first move. You got overbought. I view any reading in the slow stochastic that is over 70 without the numbers locking in over the 80 level and going sideways for several days or more is an overbought market. Overbought markets reward you by saying you're only going to stay over that number 5% of the time. I don't know how many days in a row it's going to do it, but you're in rarefied air. It's time to start taking money off the table against that. And that's just what's happening again, as it did right there. In the gold-silver ratio, when you're over the 18-day average of closes, it means that gold is stronger than silver, and silver generally loses out to the gold market. And that's what's going on right here. Now, the last break low in the silver market had been 24.22. As we're going on tonight, we're taking that out. I wouldn't want to be long any longer in the market. I think it's time in this market to say, it's got to figure out what it wants to do. It's not in an uptrend or a downtrend. It's in no man's land. In the copper market, just like I explained in the gold, you made your run at the upper Bollinger Band. When you do that and you're not embedded, I want you to stay long because I want to be trading against you, or I want my customers to be trading against you because the deck is stacked against you. All right. The way the algorithm works, it adjusts to the market. Because it has so many followers, traders start reacting. I used to go to the Chicago Bulls game, still do. And they would have this fabulous bull, how the scoreboard is, it's hanging over and the place is full. And they'd have the scoreboard and they got the fabulous music and the bulls charging through the streets of Chicago, running down to the stadium. That is what the market is. You don't want to be the guy that the bull's tramping over. You want to be with the crowd of the trade, but you have to know when to say, this is where I got to come out. I'm close enough to the stadium, I don't have to run with everybody. Well, that's what happens to me as you hit Bollinger Bands. That's an analogy for you. In the platinum, the same thing. I know that I said here over the past 3-4 days, if you were to put a gun to my head and say, Ira, it's Christmas, which one of the metals do you want to buy right now? What's the strongest one? I said the platinum market. Now it's up to the upper Bollinger Band. Doesn't mean it can't go higher. Unlike the other metals, why did I say this? It's embedded. It's got that pattern where the red and the blue are over that. So on the pullbacks, I like it. But we were saying this over here. And I was saying, I think it's going to make a move to the upside. It's got a strong seasonal at this time of the year, and you had that. Now it's time to take some money off the table, and you take a fresh look at the markets again. Doesn't mean you can't keep some of your position, but you take some money off the table is what I would teach. You don't have to do what I say. That's what I teach. And you take a look at the market come Tuesday when we all get back from vacation and fresh money starts flowing back to the marketplace. In the dollar, today's low, 132. Look at how you've come to the Bollinger Band. You're running it. You're trying to embed. Let me explain the word trying. If you take a look, both numbers are underneath 20. Both are underneath 20 the day before underneath 20. So you have your embedded reading on the close here. Now with this rally, what do I think the pros are going to do? I think they're going to sell the market on a rally tomorrow. They'll get out, in my opinion, if the red line closes over 21, and they'll look for a retest of these lows as long as it stays embedded. That's the game plan that I would think that they're going to come up with. And here's your game plan. Each morning, I put out my morning subscriber video. I start recording at 5 to 5:15 a.m. Central Time. It's posted just about all the time at 6 a.m. Central Time or earlier. Make it your New Year's resolution. You're going to come in, you're going to go to our website, you're going to go to the word research, you're going to take a look at those subscriptions, you do it, and you start your day off looking at that. All my job is to give you trade ideas based on the same things over and over, showing them on a chart, showing them why, the probability of what it works, how it works, and what it does. How do you get to this part? Well, it's pretty simple. Number one, we're going to cover in the morning futures, the whole gamut of futures, 40 some odd charts. We'll look at both weekly and daily charts. The average video is in the neighborhood of 15 to 18 minutes long. There's a bottom to it, and you can drag on the website, and it tells you what section you're in. Am I in metals? Do I want to go to the currencies? Where do I want to go? I make it easy and fast for you and easy to work with. How do you get there? Go to iraepstein.com. You can also move your cursor to the top up here. Give that a click. Give yourself a subscription and say, let me give this a try. This is how I want to start the new year. With that, I'm Ira Epstein. I'll see you over the weekend as we do, and I don't know that I'll do it tomorrow night, as we do our weekend review, looking at the weekly charts and maybe some ideas as to what 2024 may hold. You have yourself a great evening. Obviously, a Merry Christmas, Happy New Year, but I'll see you over the weekend, ideally before the new year begins. You take care.